Hello everyone, I'm Dr. Stock, and in this video we are talking about the CPI results that we got today in the market, and man, they came in definitely hotter than I expected, at least for core CPI, and I want to talk about the market's reaction to it because I thought that it was very interesting, and if you watch my previous videos on CPI, you'll know why I thought it was interesting. I was thinking 0.3 month over month, we got 0.5, and the market rallied anyway. So what the heck is going on, and why did the market move the way that it did? According to the CPI results that we got, that's exactly what I want to talk about in this video. On this channel, we talk a lot about opportunity, and here's an opportunity that you shouldn't let pass you by. This offer for Moomoo that you can access using the link down in the description. Click that link, sign up, deposit your cash, and get up to 17 free stocks. By depositing $100 or more, you get 7 free stocks. By depositing $1,000 or more, you get 17 free stocks. Each of those include 2 AI draws, and the other stocks are valued up to $2,000 a piece. So find that link down in the description. Thank you for supporting yourself, and thank you for supporting me. One other way that you can support the channel is by finding that link for the Patreon down in the description. If you want to hear more of my commentary, see my Patreon exclusives, and participate in my private Discord, that link can also be found down in the description. We'd absolutely love to have you over there. So come on over, come and visit, come and join, and let's talk about more financial opportunity together. That said, I'm Dr. Stock, Doctor of Education. Let's get right on to the content. All right, so in my earlier videos, I talked about CPI coming in at 0.4 month over month for all items and for core, and I thought that would actually come in a little bit cooler than that. Would come in 0.3 for core. However, it just wasn't in the cards today. And when I saw it come out and come in at 0.5 month over month for core, I was like, oh man, the market's not going to like this one. And then I watched the market rally, which, you know, I'm still okay with. So I can't be right on everything. One thing that I've been right about so far is that I thought that we would see a rally this week in the markets, and I thought CPI coming in a little bit low would be part of that rally. So the market is rallying. The CPI was not as low as I expected. However, I think there's data within when you pick through the details, and that's why I think when the market dropped when it first came out is because, oh man, those numbers are too high. That core number being 0.5, we don't want that. But I think as the market got a chance to digest the other information that was in there, that was something that really helped the market to continue to rally, and it ended up being a pretty decent day according to the S&P, according to the NASDAQ. If you check out Russell 2K, that was also a good day for that. So let's go over to the CPI report. So that you can see the 0.4% month over month for all items for CPI, 6% before seasonal adjustment looking at 12 months. Now you can see that that shelter was the largest contributor. That was not a surprise. Shelter has yet to trend downward. I thought maybe we'd start to see a little bit of weakness there. However, Jerome, he did say second half of 2023. He did say 12 to 18 month lag. So what is it going to be? When are we going to start seeing that weakness come through? So it does say that that accounted for over 70% of the increase that we had in the CPI read. Less food and energy rose 0.5%. So there's our core. And keep scrolling. And here I have this. As a matter of fact, this part right here should also be in magenta instead of yellow. I have the color code wrong. This is why part of the reason why I think the market rallied hard on this is that it looked at the month over month, kind of shrugged it off, figuring like, we figure we see something higher. However, overall, over a 12-month period, CPI is still dropping. That's a good thing, right? So according to 12 months ago, so this month compared to February 2022, we are still seeing the smallest increase. As a matter of fact, so for this one since September 2021, and then we see that December for 2021 for core being at 5.5%. And that's important to pay attention to going forward from here when we look at the CPI measures, that the market seems to really look at the month over month and decide on that, be like, oh yeah, inflation's going the way that we want it to. And if it doesn't like that part, then it looks at the 12 month to see if it can find those good things. That's one of the things I think is happening. I think shelter being that other thing, and I have some other details I want to show you. All right, so here's the 12-month chart that we're looking at, and you can see that it has been trending downward on both accounts since September of 2022. So as long as that keeps going down, we're in good shape. Now, mind you, that can be a little bit scary. I have my March CPI projections that I'm already putting together, and I'll tell you what, looking at core for March, according to what we have so far, it's not all sunshine and rainbows to take a look at that one. So we need a really impressive March as far as inflation goes, and well, I'll leave it at that for right now. Let's stick on February. So I'm going to zoom past all this down to page 17. All right, so on this page, I think is the reason why we see the market rallying off the news anyway. So keep in mind that shelter was already expected to be high, that food and energy expected to be volatile. So when we look at this, and we take out shelter, we go from 6% on a 12-month unadjusted basis for the CPI down to 5%. We lose an entire percentage off of that. And then when we take out food and shelter, we dropped down to 3.9. Food, shelter, and energy was on our side this time for a lower read, down to 3.7. We blast from up at 6%, dropping all the way down to below 4. And I think that taking out that volatility of food and energy, and also taking out shelter, which has been rather hot for us and has no signs of slowing yet, and it's being super stubborn, coming in at 0.8 month over month on a seasonally adjusted basis for shelter. It's just been rough for us. But when we look at all items without those things, we can see a big drop in those. So you take out the volatility, or even you just take out shelter, and man, you drop off just a ton of the inflation that we're seeing. And when you look at that on a seasonally adjusted basis, there's our 0.2, there's our 0.1, there's our 0.2. So even with food and energy in there, we still come in at 0.2. When we leave energy in but take out food and shelter, we come in at 0.1. As soon as shelter starts to inflect downward, and even if shelter starts to go negative on us, we're going to see some really big changes really quickly for this. So I think that this is really important to pay attention to, and I think that this is exactly what we wanted to see happening in order to allow the markets to experience this as a good thing. And I think there's a lot to be said here for taking out shelter and looking at that 0.2% that we get. They're like, well, that was terrible. Shelter was still high. But when you take it out, we're actually looking pretty good on a month over month basis. So in my newsletter that I have over at my Patreon, again, that link is down in the description, I did put out that I was bullish on this week, and Monday worked out for us. Tuesday worked out for us. We still have the PPI coming up. We also have retail sales, same time, 8:30 a.m. tomorrow, March 15th. So retail sales, PPI, 8:30 a.m., March 15th. Watch for those things to come out. It is going to be something. I'll make PPI as a separate video. I got another spreadsheet cooked up for that one, and I'll talk about my expectations. It won't fit in this video. There's just not enough time to do it. I do want to take a look at the markets and see how they moved and talk about where we could possibly go. So here's what the SPY's been doing recently. You can see a lot of the volatility that we've had, that we moved up above the 200-day for a while now, and then we recently dropped back down below it, having it as an area of resistance for us to close the week. And that whole bank thing really rocked us, really dropped us down through. If it wasn't for that, we'll call that a black swan event. If it wasn't for that, we probably would still be sitting up above the 200-day simple moving average. But these things happen, and we had that instability in the markets, and it dropped us right back down. Now, I would not say that resistance is firmly broken at that 200-day. I would say that it's still possible that we still resist there. We're going to have to see what the markets do tomorrow. I will say that if we get an open above it tomorrow and close above it tomorrow, then we can count it as full support. Now, about resistance moving upward from here, this is the top of the 50-day simple moving average that we have, and that is just below 4,000. I do not see us moving up above that. So we have about 2% to go for this week. I think that we close the week probably at or near that value, assuming PPI is good and assuming that retail sales is good, initial jobless claims are good, that we don't get any surprises there, consumer sentiment comes out, that's also good. So as long as we get green lights the rest of the week, I think we hover right around 4,000 to close out the week. We're going to have to wait and see what that looks like. If things go awry or sideways for us between now and then, we have 1%, maybe 2% to give up from where we're at. So we're going to have to watch that on the downside as well. I don't know, strong negative news aside, I think we have about 2% up, 2% down, and that's my range for the week. I think that we're going to end near this 50-day, if I had to call it. I think that's about where we go for the S&P. All right, so here we're looking at the Qs, and we had our golden cross moment, and man, it really, we really rocketed today off the last one. So we went down below the 200-day. We closed above it on Monday. That was good news. And then we had a little bit of levity from there following our CPI report. Probably some of that pressure coming off where we're at with the whole bank disaster thing going on. And so that leaves us in a good spot to have a little bit more room to run, especially because we're up off these levels that are down here. Now, this could be another peekaboo moment like we had with the SPY. However, I think that we have a little bit more room to run, and maybe 304. So that'd be about it looks like about $7 up from where we're at now. Let's just call it a little above 2%, 2.25% up from where we're at now. I don't think that we revisit these highs prior to the Fed meeting. We're going to have to watch and see what comes out of that meeting. If they decide to pause, that could be good for us. If they decide to do 25 basis point hike, that's not going to be so bad for us. I'll show you the Fed watch tool in just a moment. I think pause or 25 basis points. We're going to have to see 50. I believe it's off the table. According to the FedWatch tool, that's off the table. I think the markets thinks that 50 basis points off the table. We'll have to watch what they do and what Jerome has to say coming out following the Fed meeting on March the 22nd is the second day of that meeting. I'll take a quick moment to mention on the downside of this thing. So if we don't have as good of a week as I expect us to have to close out this week, we could return back down to about the 200-day simple moving average. And if we do that, that's about $8 down. So that's a little over 2% down from where we're at right now. We'll call it 2.6% down from where we're at. So I think that we have about 2% to the upside, and we have about 2.5% down to the downside of this thing. And that again will be my range for the rest of the week. Again, if I had to say to the upside, I think that we could see this value come in right around 304 to close out the week in the Qs. So just look for that. And then I think after that we're just going to have to watch and see what happens with the Fed meeting during that following week. Let's just take a quick look at the CME FedWatch tool, and then I'll wrap this thing up. So right now, the federal funds rate is currently between 450 and 475 basis points. That means right now it's an 80% chance, according to this tool, of seeing a 25 basis point hike next week after the FOMC meeting. We're going to have to watch to see if that happens. There's about a 20% chance of a pause. Now, when we look at May, it's right now saying about 3/4 of a chance. So 75-ish% chance that we hold steady, that we see that pause happening in May. And if we go out to June, right now it's saying that the most likely is that we hold steady again. However, a close second to that is that we see a second 25 basis point rate hike when June rolls around at their meeting. And then when we go out to July, it actually stays most likely the 450 to 475. So it could possibly be that when we see that come around, that we see that pause, pivot, maybe they hold. We're going to have to watch and see how that turns out for us. Holding steady in September, 450 to 475 being the most likely. And then November, most certainly taking a turnaround moment here, that the most likely thing that they're seeing in November is 425 to 450. And then finally December, we have 425 to 450. So yet another pause, again, according to what's most likely on this FedWatch tool. And this thing changes all the time. So it's nothing to sit and rely on. If anything, it's something to refer to often as different economic news comes out. You can check in with it daily, you can check in with it weekly. Honestly, you can just check in with it when we get closer to those times to see what's to the meetings, to see when that's going to be priced in. So let me summarize this thing. The CPI was not quite what I expected, although I'm happy to see the markets do what I expected the markets to do for the week overall, which is for it to be a bullish week in the markets, that we would see that green come in. And I think there's still more green ahead of us, assuming that the reports that we have coming up still reflect positive news or no surprise news. And then I think that sets us up really well for sitting in an interesting point in the markets, right at probably some area of support or resistance, a critical area of support or resistance leading up to that FOMC meeting. Like I said, March 21st, March 22nd, and that's going to be a real nail biter to watch that come out and to see the new summary of economic projections that follows it. Thank you guys for listening. If you want to hear more of my commentary, check out the link down in the description for the Patreon. Click, sign up, be part of the community. We'd absolutely love to have you over there. Also, don't forget about that opportunity with my link with Moomoo to sign up and deposit your money and get your 17 free stocks. Other ways you can support this channel besides just watching as you have, and thank you. Click the like button if you like this video. Click subscribe if you haven't, and ring that notification bell to see anytime my videos come out. I'm Dr. Stock, Doctor of Education. We'll see you in the next video.